End of a down day on Wall Street. This is Mark the Meerkat Suffron in for Dez. This is Wednesday, May 30th, 2012. Well, here's our broad market review today. Let's see what the numbers are. First of all, we had the Dow Jones Industrials down 1.28%, 160 points. S&P 500 down almost 20, still settling up here at the time of this recording, minus 1.43. Then we had 1.17 for the NASDAQ and 1.94 for the small cap Russell. Small cap Russell leading the way today, but comp did not follow along. But here's the big one. Banks down 1.9%. It led the way, folks. That is a very bearish sign. And part of it had to do with the worries about the Spanish banks and the interest rates that they're now having to face. They're concerned about a possible run on those banks. And look at this. The VIX up 12.27%. Gold was up. Silver was up slightly. Wow, look at this. Oil down 3.5%. And then the dollar was up. So there's an opposite of this that did confirm it. And for those grok grads out there, take a look at the trend. If you didn't hear my warning last night and took the short trade this morning, here is a sign. It's at 2.05. So let's take a look at the SPX. And I didn't do this last night, but this was the Fibonacci retracement. And it had been coming up here, banging its head here on the 23.6, and then boom, we broke through yesterday, then bam, we broke right down below it again today. So this is not a bullish sign by any means, and we now have this bear pullback sell in place. If it starts to fall again, this 1300 line is a major line of support that we need to be watching. Breaks below that, then the next thing we have here is at the 1283 mark, which is the big red 200-day moving average. Let's take a look at the volume today. If you go to the SPY to pick up on our volume, this is surprising. Oh, now it has now just now in the last 15 minutes popped above yesterday's week volume. But going into closing, it was still below yesterday's volume bar. So it has increased here just in the last, just since 5 minutes of 4. It is now broken yesterday's, but still below average volume. Let's take a look next at the Dow. And again, it pulled up yesterday. It was the weakest of all those because it did not make it past this resistance line. And it fell back down below. Next we have the NASDAQ, which again popped up above the resistance lines yesterday. And now is below both of them clearly. Did not fall as badly as some of the others. For example, the RUT, which is the Russell small cap, came up here, hit its head right here on this neckline of this head and shoulders pattern, and bam, look at that, fell hard down here. So next line of support for that is at 755 line, and then the 750 line, and then, you know, it could be dark if it starts to go down very quickly. So back to the SPX, the S&P 500. This bear flag that we talked about last week is still intact here, and we'll just got to be watching for that downside movement. This is Mark the Meerkat Suffron here, just to remind you that the #1 rule to trading is capital preservation. Always use that stop.